Hey, what's going on? Friday wrap-up time. Thanks for tuning in. Today was the BLS Jobs Report. I'm going to go over it with you first, and then we'll see the reaction in the charts. Well, the job losses is really what we're reporting. The experts, so quote unquote, in the market thought that we would create 80,000 more jobs. Ended up losing $103,000 job swing. Never a good thing. However, here's how the investors are looking at it. Investors are the ones that are buying mortgage-backed securities or the 10-year Treasury, which have the direct effect on mortgage rates. So they see this number and say, oh, the economy is slowing down. And then they extrapolate that to mean, okay, so if the economy is slowing down, the inflation is going to slow down, which means interest rates can come back down because a weakening economy means lower rates. Look at COVID. There was no economy, very weak, and rates plummeted. So that helps us. Unfortunately, it's a bit of a dichotomy because no one wants to be happy when people lose work, but it also helps what we're trying to achieve, which is lower interest rates. They also revised lower the gains that they reported in May and June by 103,000. It's a big miss by them. So definitely weaker numbers than were expected. However, I do want to point out one thing. The unemployment rate decreased. Well, you would think it would increase because people are losing jobs. However, here's what's really going on below the surface, and no one wants to talk about this for whatever reason. What that means is people either just stopped looking for work, or they stopped asking for unemployment, or unemployment right now. You only get it for a certain amount of money, a certain amount of time. So there's a lot of weakness under the surface as well as the headline number. So if we can get past Iran and oil comes back down, inflation reacts accordingly, I think we're in a pretty good spot over the next few months. It just depends on the whole Iran thing. So here's what mortgage-backed securities are doing today. So my chart is inverted. If you're new, green's good, red's bad. So we're trying to get higher. And you can see how we've hit this moving day average here. I think it's the 25. It's the fourth day in a row. So all week we've been trying to get past it, to get lower, and we keep being drawn back. But today, with that report, we got above it and we pulled back right to the line. So we need some more momentum, maybe over the weekend, to get us higher and to stay higher, which could mean Iran decides to finally play ball. I'm not holding my breath. Or the Strait of Hormuz is more secure and more oil ships are passing through. Whatever the case is, some sort of economic or outside force, if you will, that the news would help us is what we're looking for to get lower. 10-year Treasury, it's inverted. It works well. It's inverted from the mortgage-backed securities, but it's the normal sort of chart. The lower it goes, the better off we are. Again, hitting the 25-day moving average, trying to get lower. So we just need some more news, either like what we got this morning, or there's some sort of positive outcome or indications of a positive outcome with Iran, and we can continue to get lower. In the meantime, don't forget, there's a lot of self-employed buyers out there who could afford, but they don't think they can because they were told no by a different lender because they write everything off from their taxes. Don't forget, we've got 1099 loans, we've got bank statement loans, cash flow loans, all the above. So what I'm doing is tracking down previous leads that are self-employed that didn't want to talk to me because they just felt like they couldn't qualify. And I'm going to reiterate to them again that there are ways in which we can help them. So I would suggest you do the same thing. Let's go find some buyers that do want to play ball and that do want to buy a house. If you have questions about any of this stuff, let me know. Thanks.